All right, hello and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James, and the topic of today's podcast is going to be Mega Matrix Corp, which we've talked about previously on this channel, but we're going to revisit it now several months later to talk about how it's done since the first time we talked about it. So before we get into the specifics of Mega Matrix, just a quick disclaimer that nothing in this podcast should be taken as investing advice. James and I could have positions in any of the stocks we mention, and we reserve the right to change our positions at any time and without notice. So make sure to always consult a professional and do your own work before making any investment decision. So the topic of today's video, Mega Matrix, as I mentioned before, we've talked about it before on this channel. Basically, it's a player in the short form drama streaming space, which is a very interesting space. But Mega Matrix in particular is a particularly suspect player in the space. So with that, I'll hand it over to you, James, to explain what's so interesting about Mega Matrix Corp and why we're doing another video on it.
Yeah, so the first time we talked about Mega Matrix was back in January when we released a research report on our website, differentiatedanalytics.com, for our premium subscribers. And we talked about a lot of the red flags and a lot of our concerns with the company. At that time in January, the share price was $3.26. Since then, it has declined to $2.10. So a lot has changed between then and now. If you're interested in accessing our original short selling research, as well as a bunch of other investor resources, you can check out our website, differentiatedanalytics.com. The link is in the description below. And currently we're running a promotion where if you use the code WSM50 at checkout, you can lock in a 50% off discount, which will bring the cost of a membership down to just $10 per month. And again, that gets you all of our premium short selling research, as well as a bunch of other stuff. So make sure to check that out. If you're interested, the link is all in the description below. So getting into first a brief history of what is Mega Matrix. So prior to 2021, Mega Matrix was actually called AeroCentury Corp, and it was an aircraft leasing business. It went bankrupt in 2021. And by this point, after the bankruptcy, it was basically just an empty shell that nevertheless maintained its listing on the New York Stock Exchange. So a group of Chinese investors acquired AeroCentury Corp, and they changed the direction of the business to, instead of being an aircraft leasing company, they launched an NFT game and some type of crypto play to earn GameFi business. So they did this crypto NFT thing. It was a failure. So then they, at some point, they changed the direction of the business to focus on Ethereum and Ethereum staking. The Ethereum staking business was also a flop. So then in January of 2024, they changed the direction of the business for the third time. This time they acquired 60% of a Singaporean streaming company called FlexTV. And FlexTV does short form drama shows. It's called short dramas is the name of the category. So what exactly is short dramas, and what is FlexTV? So FlexTV creates videos. It's kind of like TikTok, where the videos, you watch them on your phone, and you hold your phone vertically, kind of like how you'd watch a TikTok video. And then FlexTV, they produce these drama series. So their most popular one is called Mr. Williams, Madam is Dying. And each series is about 75 episodes long. But each episode is only 1 to 2 minutes long. So it's 75 1 to 2 minute long videos. So the entire series is about the length of a movie, about an hour and a half to 2 hours. but it's split up across 75 very short videos. So what's the purpose of splitting up the series into so many small videos? The way that they monetize it is, if you download the FlexTV app, they'll give you, and you start watching one of these shows, they'll give you like the first 5 episodes for free. But then if you want to watch more, you want to watch more episodes, you have to either watch ads or you have to buy these virtual coins from them. And the coins cost real money. So you spend real money to buy these virtual Flex TV coins, and then you use those coins to unlock new episodes. And if you want to watch an entire series, like the entire 75 episodes, it can cost as much as $50 to watch the whole thing. So it can be extremely expensive. But as kind of from a marketing perspective, it's actually quite clever because they put cliffhangers. And the plot of the story has a cliffhanger at the end of each video. So you watch the 2-minute video, there's a cliffhanger at the end. So then you're really curious about, what happens next. So that entices people to spend, another 50 cents or $1 or whatever to watch the next episode. And then if you keep doing that, eventually you spent $50 to watch the whole thing. So that's kind of how this works from a marketing perspective. And as for the quality of the shows themselves, you can check it out for yourself. They have a YouTube channel called FlexTV English, where they put some of the episodes up on YouTube that you can watch for free. It's extremely low production quality. Okay, these are not Hollywood blockbusters. They appear to be, very inexperienced, almost amateur looking actors. With a very unsophisticated script. You can just go on YouTube and watch these. It's very low budget stuff. Megamatrix acquired FlexTV in January of 2024. And then you can see here, there was a massive surge in downloads in February. So it appears that they did, after Megamatrix acquired FlexTV, they did a massive paid advertising campaign to boost the number of downloads. And here we can see the average rating of the app on the Google Play Store. Prior to the acquisition, the average rating was quite low. It was only 3 out of 5 stars, and then it declined in around February of 2024. It got to as low as 2 stars out of 5, so a very bad rating. Then suddenly, this is after it's acquired by Megamatrix, the ratings just jump up all the way up to more than 4 stars out of 5. So the average rating on the Google Play Store more than doubled just in a couple weeks here. So that's that's a bit unusual. So what's going on here? Well, if you read the reviews on the Google Play Store, most of the 1-star reviews is basically people complaining about how the price, the cost of the virtual coins is way too high. And here there's this person complaining that to watch an entire series would cost $50, which is obviously an exorbitant price to pay for basically a low budget movie. But interestingly here, look at this review from Kenyatta Lewis. She says, they force you to rate them 5 stars before giving you the bonus points. So it appears what she's referring to is FlexTV will give you free credits, free virtual coins in exchange for leaving a 5-star review. So they're basically paying, based on what she's saying, it appears like they're effectively paying their users with these virtual coins to leave 5-star reviews. And that's potentially one way that they were able to kind of manipulate the average rating and get it from 2 stars all the way up to, more than 4 stars. So that's, a bit of a concern if this review here is true. So now that we know what FlexTV is and what the business model is, let's try to dig down a little deeper to see how they're doing. And in late February, the MIT Technology Review published an article about FlexTV, and they interviewed the COO of FlexTV. So they interviewed FlexTV's COO, a man named Xiang Chen Gao, and he's talking about their most successful show at that time was Mr. Williams, Madam is Dying. And he said that it could bring in, it was bringing in $2 million per week, while its production budget was less than $150,000. As it turns out, the production cost is actually a minority of the total cost. The bulk of the expense that FlexTV incurs is the advertising costs, because you have to they spend huge amounts of money on Google, Facebook, Instagram, TikTok ads to try to get people to download the FlexTV app and start watching the shows. And then so FlexTV says that they target that for each dollar of advertising that they spend, they target a return on investment of $1.30 to $1.50 of revenue. Well, Megamatrix has now reported their Q1 earnings results, and they reported $8.7 million of revenue for the entire first quarter. They acquired FlexTV in early January. I think it was like January 7th. So during the first quarter, they owned FlexTV for 11 weeks. Now, if you divide that 8.7 million by 11, that's about $800,000 worth of revenue per week, which is way lower than the $2 million that they were talking about in February. So that leads me to believe that the revenue peaked in February at $2 million a week, and that's when they did this MIT article. But then since then, revenue has declined, and that would also be consistent with the data from AppBrain, which shows this massive spike in downloads in February, and then downloads have been declining since then. So this year is probably when they reached that $2 million a week of revenue, but then it's been declining thereafter. And then the average revenue per week in the first quarter was only about $800,000. And here they're saying that they target $1.30 to $1.50 return on, they target a return on advertising of $1.30 to $1.50 of revenue for every $1 of ad spend. And it's indeed possible that they may have achieved this in the beginning. But when you're doing paid advertising, a lot of the times you pick the lowest hanging fruit first. So when you go on, you're doing ads on TikTok or Google or whatever, you target your ads to the demographic of people who are the most likely to convert into paying customers. And that's the lowest hanging fruit. But once you saturate those, you have to move on to a wider and wider audience that is not necessarily going to have as high of a conversion rate. So, it might be true that, they make this show and then at the beginning they're getting, pretty good advertising ROI. But over time, as they saturate and have to move on to a broader audience, that advertising ROI may decrease significantly. And that could explain why we saw this, decrease in downloads after the initial surge in February of this year. And as far as the industry and the category of short dramas, this is not new. This has been tried before. Infamously, in 2020, there was a streaming service called Quibi. They invested like $1 billion into content. Each episode was like 10 minutes or less. The episodes were filmed in such a way that was supposed to be conducive for watching it on a mobile phone. And the whole idea of Quibi was that, with millennials and Zoomers, their attention span has decreased to such an extent that they're not, people don't want to watch an entire, 20 or 30 minute long episode like on regular TV. They instead want to watch a 5 to 10 minute thing on their phone. Well, as it turned out, Quibi was a massive flop, and the company shut down less than a year after they launched. So, just based on the Quibi experience, it doesn't really look like there was demand for a paid short form streaming service. But then in 2022 and 2023, we surprisingly saw a bunch of new entrants come into the market, and specifically, there's a bunch of Chinese companies that had done short form streaming services or similar things within China, and they started launching short drama platforms in the US. And the largest one currently is called Real Short. It's a short drama platform, very similar to FlexTV. It was launched in the US, I believe, in 2022, but it really started blowing up in 2023. And around November of 2023, that's when Real Short was really starting to gain in popularity in the US. COL Group's share price doubled, but it has since given back most of those gains. And because you have to be aware that if you have something like Real Short, because these short drama platforms are so dependent on paid advertising, even if you can garner a lot of revenue, it's unclear whether or not that's going to be profitable or not after you consider the massive cost of the paid advertising campaigns. So if we compare FlexTV to Real Short, which is the market leader, Real Short is more than 5 times bigger than FlexTV, at least in terms of their YouTube channels. So both FlexTV and Real Short have YouTube channels, which is basically part of their marketing funnel, where they put some of their episodes and some of their shows on YouTube for free. And then the idea is that people will watch those on YouTube, and then they will be converted into downloading the app, where they will eventually start paying for the shows. So in the FlexTV, their YouTube channel currently gets about 400,000 views per week, while Real Short gets 2.5 million views per week, way bigger. So it's kind of showing the fact that Real Short is really the largest one. FlexTV is way smaller. And it's also important to note that, Real Short really started blowing up and getting popular in, the second half of 2023. FlexTV, Megamatrix acquired FlexTV in January of 2024. So Megamatrix's management team probably saw the massive success of Real Short, and then they decided they were going to hop on the bandwagon as well by acquiring FlexTV and pursuing a similar business strategy as Real Short. According to this article on TechCrunch, as of the first quarter of 2024, there were 66 short drama streaming services available on U.S. app stores. So it's just within the last year, it's become extremely competitive. FlexTV is just one of the dozens of new services that are trying to compete with or trying to copy the success of Real Short. When the industry becomes very competitive, is that all 66 of these short drama streaming services are basically competing for the same users. And when you have a huge number of competitors all trying to do paid advertising for a fixed audience of potential customers, that competition will cause advertising efficiency to decrease. If we look at this is also from that TechCrunch article. In terms of number of downloads, FlexTV is the 4th largest short drama streaming service. But in terms of revenue, they estimate it's the 5th largest at $7 million they estimate that FlexTV generated $7 million in the first quarter of 2024. So when Megamatrix reported Q1 earnings, they reported $8.7 million of revenue. So remember that in that TechCrunch article, they had estimated FlexTV made $7 million. So they actually made $8.7 million. So the TechCrunch estimate was actually pretty close. It was at least within the ballpark. But anyway, so they had $8.7 million of revenue, but their selling expenses, which was mostly advertising, was $7.7 million. So almost 90% of their revenue is eaten up by advertising expenses. And then obviously there's the cost of the cost of the content itself, and general administrative expenses. And Megamatrix actually reported almost a $5 million loss for the first quarter. So on the surface, Megamatrix maybe doesn't appear to be that overvalued. As of the time of recording this video, its market cap is about $75 million. And they have about $10 million of cash and crypto on their balance sheet. Because remember, they used to be a crypto company. So they still have some crypto left over. So they have an enterprise value of about $65 million. If you look at their $8.7 million of revenue for the first quarter, that's, if you annualize that, that's about $35-ish million per year of revenue. And then, compared to their $65 million enterprise value, you could say, okay, it's only 2 times revenue based on the current run rate. However, you have to consider the fact that, as we discussed earlier, it appears that the revenue peaked in February of this year and has been declining since then. That's why, as we were talking about, they were generating $2 million a week of revenue in February, but then they only generated $800,000 per week on average in the first quarter, which indicates revenue likely declined from that February peak. So it looks like the revenue is declining, and also they're losing money because they have to spend such a huge amount on paid advertising. And given how competitive the industry has become, there's basically almost no barriers to entry because it takes very little capital. And each of the shows only cost $150,000 to produce. So it's extremely easy for new competitors to enter the market, create their own app, produce a few shows, and then start doing paid advertising. So because the market is getting so competitive, the advertising efficiency is probably going to decline from here. And given that FlexTV is already losing money, and the market only seems to be getting more and more competitive, I'm not terribly confident that this is going to be a profitable endeavor for them.
Is there any chance that a bigger player, like maybe I don't know, like a Disney or Netflix, or even a private equity type company, could look at the landscape and see all these small players like Megamatrix and try to consolidate and create one unified offering and maybe have efficiencies with the ad tech or production or something like that, and maybe pay a 50% premium over market value, and maybe that's how the stock price goes up rather than down?
I personally think an acquisition is quite unlikely, because let's say you wanted to have consolidation in the industry. Hypothetically, let's say Real Short, right, which is the biggest one currently. They decide they're going to buy the top 10 competitors, right? So then they'll have this massive short drama company with huge market share. Well, no matter how big your market share is, that does not make it any more difficult for new entrants to enter the market, because as I said earlier, the barriers of entry are extremely low. And in terms of efficiencies, I don't think would be that much efficiency. My understanding is that most of them use third-party production, contractors, where there's these small companies in LA where you pay them $150,000 and then they'll organize everything and then make a low budget film for you. And I think that's what most of these guys are doing. And on the advertising, I don't think there'd be that much economies of scale because they're all just using like Google and TikTok advertising. You don't need to be a massive company with huge scale to start using, TikTok ads. So I'm not really convinced that there would be huge benefits of scale. And even if a large company were to acquire a bunch of short drama companies, well, they're still going to have the problem that new entrants are going to continue entering the market. As we can see in this chart, over the past year, the number of short drama platforms went from 21 all the way up to 66. So it tripled in just a year. Okay, well, let's say even if you bought half of them, right? You bought 30 of the 60, you bought the top 30 of the short drama platforms. Well, maybe you would get a large amount of market share temporarily, and that would allow you to have greater, improved economics. But then, what's to say a year later, there's not going to be another 60 new entrants coming into the market, and then you just end up exactly where you started. So I think the barriers to entry are just so low that, even if you tried to do consolidation, I don't think it would work in the long run. That's just my opinion. And also, I mean, another thing to consider is that the track record of Mega Matrix's management team, it's been basically they acquired this empty shell, right, of AeroCentry. They're now on their third business idea. The first one, the NFT GameFi thing, was a failure. Then they did the Ethereum staking business, another failure. And then now they're jumping on this bandwagon with FlexTV, and it's losing money, and it's an extremely competitive market. Given their track record, would you really have any confidence in this, that this will end up working out for shareholders? I personally would not, but we'll have to wait and see what happens. So that about wraps it up for everything we had to talk about Mega Matrix. As always, if you have any opinions or thoughts about Mega Matrix, please let us know in the comment section below, and we will see you all on next week's video.